Hello friends. Today on July 14th, 2025, the Indian stock market had a tough day. The main indices, which are like the report cards for the market's health, showed a decline. This means that overall, more people were selling stocks than buying them. The Nifty 50, which tracks the top 50 companies, ended the day lower by about 205 points, closing at 25,149.85. This is a significant drop and tells us that sellers were in control for most of the day. It continues the selling pressure we saw at the end of last week, showing that the market is currently a bit nervous. Similarly, the Bank Nifty, which is a very important index that follows the performance of major banks, also faced some pressure. It closed around 56,843.45, showing a bit of a fall from its previous levels. Banks are a big driver of our economy, so when the Bank Nifty is weak, it often pulls the whole market down with it. The mood today was one of caution. Investors seemed worried about a few things, causing them to sell their shares and take profits off the table. This kind of selling after a big rally is quite normal and is often called a correction. So why did this happen? There isn't one single reason, but a mix of factors. Sometimes, after a period of strong gains, the market needs to take a breather. Think of it like a marathon runner who needs to slow down to catch their breath. The market does the same thing. Investors who bought stocks at lower prices might be selling now to lock in their profits. Also, global markets have been giving mixed signals, which can make Indian investors a bit hesitant. When there is uncertainty, people prefer to be safe and sell. Looking ahead to tomorrow, July 15th, the initial signs are also pointing towards a weak start. The Gift Nifty, which trades in Singapore and gives us a hint about how our market might open, was trading in the red. This suggests that the selling pressure we saw today might continue into tomorrow's trading session. It is important to remember that this is a short-term trend. The bigger, long-term picture for the Indian market is still considered positive by many experts, but for now, we need to be careful and watch the market closely for the next few days. Now, let's talk specifically about the Nifty 50 and what we can expect tomorrow. Currently, the short-term trend for Nifty is considered bearish or downwards. This means that in the immediate future, prices are more likely to fall than to rise. The index has slipped below an important technical level called the 20-day Simple Moving Average, or SMA. This is a line on the chart that shows the average closing price over the last 20 days. When the price falls below this line, it's often a sign that the momentum has turned negative for the time being. To understand where the Nifty might go, we look at support and resistance levels. Think of support as a floor that can stop the price from falling further, and resistance as a ceiling that can stop it from rising higher. For tomorrow, the immediate support for Nifty is seen in the 24,900 to 25,000 zone. If Nifty falls to this level, there might be buyers waiting, which could help it bounce back. A stronger support level is a bit lower, around 24,800 to 24,700. These levels are very important to watch. On the other hand, if the market tries to move up, it will face a hurdle, or resistance. The first resistance level for Nifty is around 25,220 to 25,300. This means it will be difficult for Nifty to cross this area. The level of 25,331, which was a support level before, will now act as a strong ceiling. For the trend to become positive again, Nifty needs to break past these resistance levels with good buying strength. Until that happens, the path of least resistance seems to be downwards or sideways. So, what is the strategy here? Many experts are suggesting a sell-on-rise approach. This simply means that if the market bounces up a little, it might be a good opportunity to sell, as the overall trend is weak. This is a strategy for short-term traders. For long-term investors, this correction could be seen as a chance to buy good quality stocks at a slightly lower price. However, some experts advise waiting until Nifty gets closer to the strong support zone of 24,800 before buying. Let's shift our focus to the Bank Nifty. The story here is quite similar, but with its own unique details. The broader, long-term trend for Bank Nifty is still considered positive. But in the short term, the outlook is sideways to negative. This means it might not fall very sharply but is unlikely to make big moves upwards either. For the last week or so, the Bank Nifty has been stuck in a range, moving between 56,500 on the lower side and 57,600 on the higher side. This is called consolidation, where the market is deciding its next direction. Just like with the Nifty, we have important support and resistance levels for the Bank Nifty. The immediate support level, or the floor, is at 56,500. If Bank Nifty breaks below this level, the selling pressure could increase, and it might fall towards its next major support zone, which is between 56,000 and 55,500. This area is very crucial because it is where other technical indicators, like the 50-day exponential moving average, or EMA, are also located, making it a strong potential buying zone. On the upside, the main resistance or ceiling for Bank Nifty is at the 57,000 to 57,500 zone. For the bulls or the buyers to take back control, the index needs to decisively cross and stay above 57,200. If it manages to do that, we could see a move back towards 58,000. However, as long as it stays below this resistance, the sell-on-rise strategy remains valid for the Bank Nifty as well. This means traders might look to sell if the index moves up towards 57,200 or 57,500. For investors, the advice is to be patient. The current weakness in Bank Nifty is seen as a corrective dip within a larger uptrend. This means that buying during this dip, especially near the strong support levels around 56,000 to 55,500, could be a good strategy for those with a medium-term view. However, it's important not to rush. It is wise to wait for the market to show some signs of stability or a reversal before committing fresh capital. Watch these key levels closely to make an informed decision about your investments. So, what should you, as an investor, do tomorrow? The most important advice is to stay calm and not make hasty decisions based on fear. The market is currently weak, and it's best to be cautious. If you are a short-term trader, the sell-on-rise strategy seems to be the popular choice. This means you might consider selling when the market bounces up to a resistance level, expecting it to fall again. But remember, this is a risky strategy that requires careful monitoring of the market throughout the day. If you are a long-term investor, think of this market dip as a potential sale. Good quality companies are now available at a slightly lower price. This correction could be a buying opportunity. However, you don't need to buy everything at once. A good approach is to invest in parts. You can start buying a small amount now and wait to see if the market falls further to the strong support levels we discussed, like 24,800 for Nifty and 56,000 for Bank Nifty. This method is called systematic investing. It is crucial to avoid panic selling. If you own good quality stocks for the long term, a few days of market weakness should not scare you into selling them at a loss. Market corrections are normal and healthy. They remove the excess froth and prepare the market for its next move up. Remember your financial goals and why you invested in the first place. Sticking to your plan is often the best thing to do during volatile times like these. Don't get swayed by market noise and rumors. In conclusion, the outlook for tomorrow, July 15, 2025, is cautious. The short-term trend for both Nifty and Bank Nifty is weak, and we might see some more selling. Keep a close eye on the key support levels, 24,900 to 24,800 for Nifty and 56,500 to 56,000 for Bank Nifty. A bounce from these levels is possible, but until the market shows clear signs of strength by breaking resistance levels, it is better to be safe. Be patient, stick to your plan, and use this dip wisely. Happy investing!